Think about the note from Deutsche Bank's analyst about them coming up shy, maybe a couple 100,000 on deliveries for the year.
I mean, I think it's a waste of energy. Tesla's going to deliver, 1.8 to 2 million cars. They're the dominant player in the EV space. And now with the Ford, plant on hold and, basically competitors sort of dying by the wayside here, Tesla's going to come out of this interest rate cycle in a stronger position than the other car companies, especially many of the EV competitors, which need capital. So the Fed is inadvertently helping, Tesla a lot in continuing its dominant position in the EV business. But worrying about a couple of 100,000 cars, this, that, this is a company that went from selling 100,000 cars a year 5 or 6 years ago to now almost 2 million and on track to, continue to grow at a 40-50% rate. So that's Tesla.
Have you ever wondered about the fate of Tesla in this ever-changing auto industry? With new EV models hitting the market yearly, we may be forced to fear the future of Tesla. But do we really have to? Join us as we seek answers to this very critical question and discover what the future is going to be like for this leading automaker. As we zoom into the era of a cleaner, greener energy future, Tesla is like that cool kid leading the way. The automaker is not just building electric cars, but also crafting a sustainable future in manufacturing, transportation, and energy storage. It's a bit like watching a thrilling race where Tesla is in the lead and the others are trying to keep up. Now, there are some new electric vehicle startups in the US trying to ride the Tesla wave. But let's be real, they've hit some bumps along the way, and the road ahead doesn't look as smooth as they thought, and it's not going to get any better. Which is why we think Tesla is still going to maintain its position in the lead for a long time. In this video, we'll explore some of the details behind this theory and discover the dynamics of Tesla's business, the one fact that makes it stand out amongst other companies in the world. Let's dive in.
So it is a great time if you're an old investor who is focused on income. We haven't seen income levels, guaranteed rates this high in like 25 years on the 10-year. And, 5% guaranteed by the government with inflation at 3% going lower is a great return for safety. But over the long term, the stock market's averaged 10% a year. So if you accept 5% a year and you're saving for a long-term goal like retirement, you're never going to reach your goal. So it's still not a good enough yield if I'm a young investor to choose a T-bill over Tesla, let's say, where over the long term, Tesla has tremendous growth opportunity. So I think for each investor, it's that balance between stocks and bonds. And that's what we do at Gerber Kawasaki is really like determine your risk tolerance and build your portfolio around that.
What kind of risk tolerance does one have to have for Tesla right now? I think the chart's fascinating over the last 3 years. We've got the downtrend off the highs, but the uptrend off the lows. By my armchair technical analysis, so, Ross, it looks like we've got maybe a month before this thing's got to either break up or down. Which way you think it's going to go? I think I might already know the answer.
Well, I'm not going to tell you which way Tesla stock's going to go. I mean, I wish I knew that for sure. But, we work around valuations, and Tesla is still one of the highest valued stocks in the market based off its forward PE ratio. Tesla has a lot of things going for it, like the Cybertruck launch, and a great article today in the Wall Street Journal about how the mega packs have really stabilized the electrical grid this summer and helped Texas and California avoid blackouts and all the utilities that are investing in Tesla energy battery systems, which are just revolutionary in our energy system. So I think long-term Tesla is an incredible investment. On the short-term, Tesla has these headwinds with higher rates, retooling the factory. So I think if your goal is 1 to 2 months, I don't know about Tesla, but I think if your goal is over the next 3 to 5 years, Tesla is as good of an investment as ever, and it's just a high-valued stock.
The most significant challenge to Tesla in the coming years, and all of the other established automakers and a group of Chinese manufacturers, is actually going to be how these automakers still have a long way to go in order to catch up with Tesla. Based on this fact, it remains abundantly clear that despite a long list of compelling new EVs coming to market, Tesla is still a dominant leader, not only in terms of sales, but also in terms of technology demand and profit margin. Hey guys, welcome back to Tesla Tomorrow. In the realm of electric vehicles and automotive innovation, a trailblazer emerges that defies convention and redefines the essence of driving, and that is Tesla. Let's face it, there are plenty of EVs out there, and more are coming up soon. But guess who's been leading that charge? Yep, it's Tesla, the one everyone else is chasing. What most investors don't really understand is that Tesla has made a historic rise up to become the top of the car market, and it's all thanks to its cutting-edge EVs and advanced energy solutions. Led by Elon Musk, Tesla's rise has become meteoric, and it's no surprise. On Wall Street, Tesla is more than just a symbol. It's a phenomenon. It's a stock with a jaw-dropping 7,278% surge over a decade. And it's a financial supernova, captivating investors and the market's attention like few others can. This company's been more than just significant cars, but rather it's seen a pretty impressive movement towards a greener and more efficient driving and manufacturing procedure. Tesla is ahead of the competition, and there are many reasons for this. Let's see what those are. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. So here's the scoop. Tesla isn't just leading in sales. They've got the tech, the demand, and the cash flow going strong. Why? Well, there are a few reasons that make Tesla top dog. First up, Tesla doesn't play the leadership game. You know how traditional car companies share profits with dealers? Tesla skips that and sells direct to consumers. The result is more cash in the automaker's pocket. And then there's FSD. Tesla's been developing its FSD software since 2016, and recent progress shows that the car company's self-driving software is becoming more than that of its competitors. Every Tesla is equipped with the hardware necessary for full self-driving, meaning that a customer only needs to buy the software package to enable it. Besides Tesla, no other car manufacturer is even close to developing in-house self-driving software. Note that Waymo, Cruise, and Mobileye are not car manufacturers, and therefore, for other car makers to include this technology in their own vehicles, they've got to license the self-driving software from another company, and this will no doubt increase the vehicle's cost. Tesla's FSD positions it on the forefront of the recent AI evolution, and it's only going to go up from here. And the reason for this is because Tesla bull Cathie Wood described the car company as a hidden gem of AI-related stocks, believing that the biggest beneficiaries of AI technology is going to be the companies with the largest proprietary datasets. In a previous interview, Wood stated that Tesla has got the largest pool of real-world driving data in the world, adding that the company has more of the kind of information that will become valuable in its future endeavors. Let's talk about numbers for a little bit. Cathie Wood says AI is going to make knowledge workers 4 times more productive by 2030. Even her company ARK Invest predicts AI could rake in trillions. And guess who's in a prime spot to cash in on this? Yep, Tesla investors. There's also the Robotaxi, one of ARK Invest's most anticipated Tesla projects. The firm is pretty hyped about the Robotaxis coming out of Tesla, and they say that they could pull in trillions in revenue by 2030. That's going to be quite a bit of money. The firm predicts that Tesla's Robotaxi business will contribute 67% of its expected enterprise value and 64% of its expected EBITDA in 2027. And there's other things too. It also expects that Tesla's EVs are going to contribute 47% of revenues in the same year, despite having substantially lower margins than Robotaxi. But here's the scoop. While Tesla's still sitting pretty, they've got some homework to do. For one, battery tech, and it's a pretty big one at that. Tesla has made significant strides in battery technology, especially with the Model S and Model X vehicles. And there's no need for any fear in this sector because there's still a need for continuous improvement in this technology. By improving it, Tesla can increase the range of its vehicles and make them more efficient. And that will not only appeal to consumers, but it's also going to help Tesla to meet the strict emissions regulations that are being put in place around the world. It's simple. Improving batteries means longer drives and happy customers. Plus, it helps to tick all the green boxes on the global eco checklist. Batteries are like the secret sauce for electric cars. There's no doubt that there are many compelling EVs on the market today, plus many more along the way, and there are some others coming very soon. However, it is a known fact that Tesla has been a first mover over and over again. In a world where change is the only constant, Tesla's setting the pace, and the rest, they've got to hustle hard to catch up. What do you think? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.